All right, so we back. Pre-week market analysis for the last week of February. We always start off with the news calendar for the upcoming week to see what can we be anticipating. I typically like to keep all of the currencies, the world countries in my economic news calendars. I know some people toggle off all of the other countries and just keep the U.S. But because I trade the gold and oil futures markets, I like to make sure that I'm aware of the other countries' economic news releases throughout the week as well, just to be cognizant. You might catch a move in gold, for instance, because of Australian dollar, which is backed by gold and is a commodity dollar, as well as Canada, which is a big distributor of oil and is also backed by the commodity oil. So you typically see some correlation between the commodities and these countries' currencies. So we got Australia releasing news around 4:30. That'll be during Asian session on Tuesday, and then we have Trump speaking. I think it's the State of the Union address at 6 on Tuesday. Thursday we got unemployment claims, and Friday we have core PPI, PPI, and GBP for Canada. So now that we are aware of what should be dropping, I'm gonna get to these charts, and starting off with the dollar. As you can see, we are in a pretty interesting spot right now. As you can see, last month in January, price traded below this external range liquidity. Here, after trading above buy side external range, you also have this move too as well. That also took out that sell side liquidity, and you now have price running back into the range that was created on this down move. So last week we seen some pretty big retracement week, and back into this range. You also is getting a close above the previous quarter's low. So although I'm still bearish on the dollar, we're looking at the weekly chart right now. As you can see, this is where we are within the monthly time frame. See, it's a consolidation happening here. Ultimately, until we get back above December's or January rather, or November rather, this 99.75, which is the opening of November's candle, I'm still bearish. As you can see, this move down is we've already changed the state of delivery on the monthly time frame. So the monthly is still bearish, and the next target that I would be looking for on a monthly perspective, if this stays intact, is this 94.65. So if we drop down to the weekly, we'll also see, I think that I have that 94.62. Okay, so 94.62 is still, from a monthly perspective, this is my next objective for this the weakening of the dollar. But again, we do have some indication that price may want to trade back into this range, give us a little bit more premium. We want to see if price can close above this level at 97, 98. If we could see price get above 98 and close this week, that's the even more of a reason to be bullish into the beginning of March in the dollar, right? Let me drop down to the daily. So again, I want to mark out my openings for some reason. I tried to clear my chart and make sure that the drawings were fresh, and it ended up deleting all. I ended up deleting the boxes and all those things because I typically have a lot of those on my chart, but I want to keep it kind of clean in terms of the boxes and the text and all of that, and just keep the most important levels and markers in price, which is the openings. So this is January's open right here. So this is now the yearly open. And I want to extend this out in time because I want to be cognizant of this for the entire year for the most part. And now I want to mark out February's open, which is here. We're marking out February's opening to the beginning of March. All right, so this is what we got right now. This is where we are. We have a small imbalance here, but I don't typically like to consider these super small imbalances because they're not really I mean, it's not to say that price could not trade to it, but you know, in my experience and chart analysis, these typically don't really hold any weight. If anything, if it did trade into here, it would trade it into here because to accumulate the low from Thursday and then trade higher. But some people like to, have that on the chart. So, to each his own. If anything, I believe that this imbalance here is more important as price has come, traded into it, respected the mean threshold of it, and has sought to trade higher, right? So if we ever do come back into this area, we would want to see price hold, and if it does break below it, we want to see it act as support for lower prices. But yeah, right now there's nothing in here. I guess we could say that this imbalance is somewhat important. Again, I really don't like this imbalance either because it was created, but there was no low taken as a result of this creation or to serve as support for maybe this low being taken. That would have signified to me that this is an important area in price. But because there was nothing traded into for this, right? If we talking about this imbalance here was used to trade into this imbalance, this one right here, then we could probably, say that this is an important imbalance. But you can see price was already inside of this. This down move actually was already inside once this imbalance, once this candle closed, which created this imbalance. So I don't consider this an important imbalance either. So for me, I just want to see price run higher out the gate if it is, bullish. Although we did have this external or internal range liquidity taken here. My thing is to see price continue to just run higher and reach into this the monthly open or the yearly open actually. So January's open, reach into here and possibly continue to build more of a premium here. So I would be considering like this order block, right? This to be like the target for the week. See if we can see some type of price action move up into there. Yeah, so that's what I'm anticipating for the dollar. Higher prices. For moving on to NASDAQ, we see that price is still trading inside of the first week of February's range. And so we now have a move back above previous month's low. So we want to see if price can show some willingness to trade higher to begin the week and close, still seeking to close above this previous month's low, January's low. Here is where we could get a possible change in the state of delivery. So this is my first important area in price, that if price does continue to trade higher for the week, that we should see this being the target to one of the first targets that we could possibly form a trade setup or idea around. I'll put this as a possible change in the state. Weekly perspective. And for me, what I typically like to do is be aware of these areas in price, because again, price could seek to come to this level and not necessarily trade above it, but use it as a reference point, right? So let me find a swing point where price, traded to this level, but didn't necessarily change the state of delivery. So like right here, right? We could say here was where price started to trade lower, and we say, okay, where could we possibly want to set up or have a objective in mind if we was taking shorts here, to make this like a high probable target to be hit. Maybe it doesn't want to reach for that low. It actually did take that low there, but we say, okay, if price does come here and it starts to like shift, we would want it to close below here in order for the change in the state of delivery to be locked in, trade and close below it. What this typically is, because all swing points are lower time frame market maker buy and sell models. In this instance, this will be a market maker sell model. This swing high, but it was just a move to trade below the origin, the original origin, the consolidation of this market maker sell model to then become a buy model, right? And then you start to see it higher. So that's why I like to have the possible change in the state of delivery points marked out, because I know that these are market maker models, and typically, even if price is not necessarily going to change the state of delivery, it will reach back into these reference points as possible targets to then accumulate here, accumulate orders here and then continue higher, because this injects liquidity into the market for those who push their, move their stops higher once they see this type of move happen, or, from this close. And so I like to keep these on my chart for possible profit targets, and to be aware of, if I do get a close above here, then I can start to anticipate, this target right here, and this high and previous month's high, and ultimately back up into all-time high. So that's why I want to keep that on my chart. All right, and we transpose these reference points down into a lower time frame. So now we see this possible change in the state of delivery is actually February's open, right? So this is also another reason why I would want to be targeting this area and price right here, right? We also have the yearly open for NASDAQ, January's open right in this area. So this is like a high confluence area. We also got this short-term internal range liquidity, short-term buy side. We should go abbreviate that. DI means daily internal. So we have this daily internal buy side liquidity resting above the market near a possible change in the state of delivery, which would also be February's open, also near January's open, which is the yearly open. So these are high confluenced areas that, I would personally be targeting for the week. You even have this right here, which would be a daily change in the state of delivery if price get back above here. So all of these are like short-term targets for me to aim for, to frame trade ideas around again, and have areas for profit targeting if I do if you do want to hold and possibly take a swing trade, like this would be, seeing if I could get like a move down that retests the monthly low and then starts to trade higher, getting it closing above this area here, which is again this possible change in the state of delivery on the daily time frame. These are how I trade. I frame my trade setups to and be aware of tight range market conditions, which we are in right now, right? So we don't necessarily want to be framing swing trade ideas in this range bound market. But if I was scalping or if I was intraday trading, you have a range of Friday's close was 25,079, and this possible change in the state of delivery will happen at 225, 288. So we talking about a 200 point range that we could frame a trade idea off of, and seeing this bounce even more than that, seeing this bounce right here, we talking about a 260 point move, and that's enough to complete your trading week within one setup if you frame it right. So that's why I keep these points on my these reference points on my charts. You got this right here, from here to here is a 400 point move, so not too many people like are I see in the space that kind of keep these possible points as references in their charts. For me, I found that it allows for me to not having, and I personally typically like to catch scalp trades that turn into larger moves. I'm a 15-second, 1 minute type of trader, but I'm always cognizant of higher time frame key reference points to give me more confidence in holding my trades a little longer, holding my scalps or intradays a little longer. So that's what I have for Dow. Nasdaq rather. We're tight in this range bound market. We could possibly see a shift in structure here. We're still in this again. This is February's move down, right? So we're still in February, the first week of February's trading range, and we could see a possible shift in structure happening if we can get back above Friday's high and close above here 129. So I will be looking to be bullish to begin the week in Nasdaq. Here we have ES, S&P. We have price running below second week of February sell side low. Also trading below previous month's low, then trading back into the range. Again, we are in this tight range bound consolidation, so there is no real clear direction right now as to what price wants to do. From a weekly time frame standpoint, you can see that price ran this sell side liquidity here and is looking now to come back into the range. Again, we are in the first week of February's trading range, so no real reference points to point out on this time frame. So we go to the daily and see what we got. So again, price is traded back into the range here that we're inside of. If we grade this range, we are currently in a premium. So we are in a premium right now. I want to see if price can get some closure above this fair value, fill this in, right, close above the high of it, and possibly start to trade even higher. We're already, whereas NASDAQ is not above its yearly high just yet, we have ES is. So that is another good confluence for NASDAQ to possibly trade higher for the going into the week. See if it can retest its yearly high and possibly close above its yearly high. Right, so if we do see some movement down to begin the week, we could possibly see it retest the yearly open and then begin to trade higher, possibly retest February and see if it could get above previous quarter's high. I know a lot of people like to transpose 4 hours, the 4 hour time frame down. Still got some heavy feeling in on this SIBI, but it looks very good in terms of price getting back above February's high and ultimately trading higher, possibly this high here at 69.92. So we can see some possible move into that if we could clear this imbalance. Now, the reason why I say this high and not this high, although if it does take this high, you can kind of anticipate this high being ran, is because this wick right here could serve as a rejection block still to be holding price lower and just keep it in this range bound environment that it's currently in right now. So I typically like to look for this to be and also this point at which it would be a change in the state of delivery, higher time frame speaking. See what that is on the date. Okay, so that's just a wick, right? But if we say right here would be a change in the state of delivery for the daily as a possible target, you will be aiming for that. These are the type of things that I look for. Again, the opening prices, that will be if price does reach for there, will be the change in the state of delivery, the first leg of a swing. Also, another key point that I like to be cognizant of, because once price does, typically trade above here, it's either a completion of a buy model on the lower time frame, and it's also again a swing pattern that is fully confirmed if we get like a strong close above it, right? And that's just swing pattern forms indication that we could see price going higher. So or lows are locked in and we could like I said, see price going higher. So I like these. We'll mark this one and as a possible change in the state of delivery on the daily. So again, that's another thing. Like, I really don't even like this imbalance, because it would have been for me an important imbalance to be cognizant of if price would have traded to it and taken it this low as a result of that, right? And see, here's another example of you targeting the change in the state of delivery, right, on here, but not necessarily getting that close. So we would have seen price trade. Actually, I was looking at this, seeing price trade into this imbalance, right? And then the first target would have been this change in the state of delivery, this consecutive up close candles. So if a person was anticipating this to hold for lower prices, this being would have been the target, and this would have been the target. I think this was Tuesday's low. My idea was, okay, we seen price come into it, respected the mean threshold of this gap. Now I would have been anticipating, if this gap was to, send price lower, the first target, which we got, would have been the change in the state of delivery point, which was here. But as you can see, price came, traded to it, wicked off of it, came again lower, and then it ran higher. So this was a classic example of still getting a profit objective achieved, but not necessarily may have been getting the entire fill that you would have been anticipating to get had once price did trade into this. So this is just like, again, a partial. If you was like a swing trader or something, I'm looking at this, price runs into it here, and now we start to see it moving away from. This is my first area and price that gives me confidence that it could probably trade lower if it does close. But you see, it did not close. It came, touched it, and traded off higher. At least for instance, if I would have seen this and I would have been like, okay, I could, once price does reach here, I could potentially, if I did enter at the mean threshold or whatever up in this fair value gap, I seen a trade idea present itself. My first objective would have been for price to trade to here. Then I would have been looking to either, depending on what the trade idea was, whether it was a swing trade, a scalp, intraday trade, I would have been looking for a profit objective or reason to go break even once price did reach here. But you didn't get that, obviously. Now, if you would have partial, you would have got paid. If you would have set your stop to break even, that was it's a break even trade. It's not a loss. So risk free trade to see whether your anticipation, your trade idea will have panned out or not. So that's why I keep these points of price on my charts. But yeah, so yeah, we could possibly see, in line with NASDAQ, some movement higher. Dow, you have Dow above February's open, above its yearly's open. All of these are, and then Dow just does just the most monstrous moves. Not really couples, in sync with the Dow or NASDAQ and S&P, but still, nonetheless, they do have some relative correlation. So we take these ideas that, price being higher here, price being above its yearly open and its February open, as a good indication that we could possibly see some higher prices from the indices. You have this move, we could possibly see some some run above previous week's high and the monthly high. And if we can get above here and stay strong above here, all-time highs are back on tap for March rather. So we just, for this week, safe bet, we'd be looking for previous week's high and possible change in the state of delivery will be here. And, if it gets here, we could just anticipate price going back to an all-time high. So that's what we got for Dow. Moving on to gold. Gold looking amazing. A lot of people would have been, including me, I did. Again, another example of price forming a swing. Once you see this move happen, your next trade idea or your profit target, you could have this reference point as one profit target. Once price does trade into this imbalance, rather than be anticipating it all the way to come all the way down here to take out this low and validate this sell side imbalance, you could be just targeting here. I see it trading into here. I get a move all the way down here. You looking at say from the mean threshold of this imbalance right here. You see price respect this imbalance. Next day, Thursday, you take this trade, you hold it till Friday. Let's say this mean threshold, you find some type of setup here at 5.017, and price trades all the way down to 46.86. That's over 500 points. 5.014, 68. A little over 500 points. That is a great setup that you can take, and not necessarily have to be holding for all the way down here. So just a little game for y'all. But again, I don't like this as an imbalance again, because there was no low taken as a result of price trading into this balance and respecting it. So although we did see like a lot of consolidation in here, ultimately I would have been, once we did come back into here, I wouldn't have anticipated this to be a reason to send price lower, especially once you got this run here. That's not a reason for me to anticipate price coming lower. We got this volume imbalance right here. Okay, that would have for me been the point that I would have been looking for price to start trading higher, not because this imbalance right here, this sell side imbalance. So again, now we got gold running higher now, possibly looking to fill some more of this wick in. ICT likes to grade the wicks, so we're gonna grade that wick and possibly look for 53.19 to be one area that we looking for price to reach into. As a matter of fact, let's put this on here. 53.19 as a first objective. And again, no, because that's really like the only reference point on the daily. And you transpose that to lower time frame, it would be coming into this like this down move, which would be a good premium to reach for 75% of this price swing. Yeah, so that's what we're looking for. We're looking for ultimately this volume imbalance to remain respected here. As long as this volume imbalance stays respected, we could be anticipating price to run back into its all-time high. I want to see also this breaker hold here. I don't want to see price below here for the week. And for me, I like to, it's crazy, man. I've been studying price for a very long time, and a lot of things that stand out to me typically. So like some people like for to grade their order blocks. You know, some use the bodies, some include the wicks. For me, I like to include not only the wicks and the bodies, but the next candle, right? Wick. So if this is a bullish order block, right? For example, I typically include the body and the wick of this candle, as well as the opening and low of the next candle, because this is actually a this is a bad example. Hold on, let me find one. So what I'm trying to explain is, okay, say for instance, right, would have been looking for this to be a bullish order block. Price comes down into it, trades into it, boom. You say that this is a bullish order block. I include this entire candle range because if price closes, you see the candle, price opens, closes down, trades off of it. This candle opens, trades down some more. So this is a part of this down move, this wick, and then it starts to trade higher. And then once price closes above the high, you know that the order block is locked in. So whenever it does come back into it, you see that this is the mean threshold of this bullish order block. Price hits it in line with this volume imbalance, and now we're starting to see some movement away from it. And that's why I like to include, well, typically I like to have it the opening and the wick down of the next candle to be my order block, because I would like to see it trade into the open and then get away from it. So, and in keeping with that, this is now a bearish breaker, a bullish breaker, because you see this up move created the trade below this internal range liquidity, short-term internal range liquidity. Once price trades back above it, we would have been looking for this to be an order block if price would have came lower, but because it did come back in and close above it, now this is a potential bearish order block flip turn bullish breaker, which we would want to see price stay above, hold for bullish ideas and bullish scenarios to continue to be highly probable in the market. So I'm going to mark this out as a bullish breaker. And this also be a reason for price to see some trade back in and move away to target this 513, 53.19 rather. And then again, we have this possible 54, 52 level as a change in the state of delivery. Obviously, I don't think that we would get this high. You know, it's I don't think it's likely that we get that high, but you never know. We got this move down, which was a range of 54.81 to 46. That's almost 800 points. So anything is possible, you know. So you just be aware of near term target. I think that 200 points is not that far off at all, especially when we consider like ADRs and AWRs and AMRs. See, we got the average weekly range for this week coming up to be at 514, 54.10 rather. So it's possible. It is possible. These are another confluences that I like to use, you know what I mean, for like profit target, holding for profit target objectives, being cognizant of what's the average weekly range, what's the average monthly range, what's the average daily range, what's the average yearly range. All of these help to give you a little bit more confidence in holding your trades a little longer. It's not to say that it always pans out like that, but you know, it's just one thing that you can use for a confluence to hold for longer profit objectives. Silver, we got silver trading above we have silver trading above previous February's open rather. We already have gold above the open. Now this right here is a valid, for me it's a valid SIBI. This is a valid SIBI because again, price comes into it, taps it, trades into it, doesn't even reach the mean threshold of this SIBI, and then takes and trades lower. So if we see price get back, we will want to anticipate a move back into this range, which is already happening, right? You can see and we want to see price trade into the mean threshold of this SIBI. And because we want to see that, we have these targets for profit objectives. Is high. We have this move right here, which would serve as a breaker, right? We want to see price close above it for a possible target. You already have price trading above here, so yeah, I think that this 87 and these will be like the targets for the week. To begin the week, you know, if we continue to see higher prices in silver. which is pretty good to consider, as we've already come down, shifted structure here, traded higher, looking to take this high at 86.10. I wouldn't be surprised if price opens up and already traded above here and just continue to show some strength to get back into this SIBI. You want to look at the weekly just for reference sake, and we have these 2 points, 92 being the better of the two, which also is into this this bullish order block or this bearish order block, and we could see, long term weekly target will be 104.52.5 to see if we can get a change back in the state of delivery to get back above previous the all-time high. So we're also bullish in silver, and we have oil. Go drop higher time frame. Oil has been going crazy. I have been watching oil. Don't really take too many trades in oil, as I'm kind of like, I be dialed in on NASDAQ and gold and silver most of the time. But as you can see, previous week's high took out this move here. The previous quarter's high has served as the level of support to send price higher, ultimately trading back above January's high. And so I think that these two areas, if we do see like some possible retracement off of this, it'll be, price could potentially come down into here, find some bounce, and start to trade higher, targeting next target really is here. Actually it's this 69.67 for me. And let me see, this is the volume imbalance. The reason why this is the target for me and not the high just yet, because what I typically see is if this is an area where trap liquidity is, price will come, trade into it, and start to trade lower just to protect the trap liquidity that is here, not release that liquidity if it is bearish. But it doesn't look like it's bearish, right? We got this run. We got this run below here, and prices shifted higher. We also have this move where internal range liquidity was taken, and then price start to trade lower, ultimately trading below this right here. And now we got this run back above it, right? So now once this high is taken, we then look to the left to see what other reference points we can be aiming for. So the last area where a liquidity was induced into the market, that's one area, although they are typically close in proximity to each other, 69, 65, and 70.53. That's like a 500 point, 500 point difference between each other, almost 500 points. So, take with that what you may. But this is just how I find setups and find profit objectives, and so I'm not necessarily having to figure I need to hold for this entire move. I could be out right here, you feel me, and let it do what it do, and let the market do what it's going to do, and see whether it wants to take the liquidity there at 70.50. So drop it to the daily. Again, we have this good looking move. You see prices at this where it engineered liquidity here and then started to trade lower. We have this bearish order block here at this level of price, and so we was to draw that out, we could mark that as a potential area in price where price could hit it and start to see some reaction from this area, because it is in line with this bearish order block. Again, last week we seen two strong bullish days away from this previous quarter's high, as it served to keep price above 62. And now we want to see price hold at February's open. Again, we could see some dip into here, but ultimately we want to see price stay above here, this, which is a bullish breaker rather. You see price came up, traded below this internal range liquidity, and started to trade higher. So that's an important reference point for me as well, to find some support if price does trade lower to begin the week. And if I'm looking for anything on the left side of the curve, I'm looking for objective wise, I'm looking for this volume imbalance right here, which isn't really a lot from where price already is right now. So we could potentially even see price trade into here, which I think it did already. Yep, it did. All right, so that's the next area in price we looking for is this we looking for 69.60, and I really don't like this volume imbalance because this would be a breakaway gap. Yeah, this would be the breakaway gap right here. So I will be wanting price to come back into this bearish order block rather than this bullish breaker, because if it does come into here, I would typically want to see this fair value gap fail, because it did serve as a breakaway gap on the downside of this sell side move. So yeah, we looking for, but although I personally don't think that this will hold, we could still see some reaction from here. So I'll just keep this on the chart too as a FEG for the target. change this and use a price point, a price note. We got that there. And we also got this here. So yeah, 69, 65, and I don't know why I said that. This is like 100, like 90 points anyway. 500 points. Where did I get that from? $69 and 70. Yeah. So yeah, that's what I am looking for in oil. These will be the next price levels that I'll be looking for price to reach into. All right, and last but not least, got Bitcoin madness. As long as we stand below this sell side liquidity, I have price coming down into 59.68 and ultimately 58.60. We got that strong down move a couple of weeks ago. February's price action, the first week of February, seen that down move, and now since then we've been consolidating inside of this range. This price looking to make its move again. You know, even if we not targeting previous week's low again, the first target would be 66 for 43.67, and once price does close below here, get a strong close below here, we can be looking for these levels. 58.821, and if she really feeling frisky, 49,000. So yeah, see how we play out. I'll be dropping some more charts and, you know, giving a little bit more sauce on how I have begun to understand how price books and moves. Also be updating with a midweek review. I don't really like to do daily reviews. I wouldn't say I don't like to do them. It just gets a lot if I have to do all of these charts on a daily review. So just keep it like, I just like to keep pre-week, midweek, and post-week reviews. I didn't do a post-week review this week, but I'll start doing it this week. So yeah, as my mentor would say, good luck, good trading. Peace.